Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equity markets look set for a volatile session of trade on monthly F&O expiry post Fed rate hike. GIFT Nifty at this point of time was indicating a positive start coming in for Indian benchmark index. Wall Street ended somewhat subdued after Fed moved on expected line. Dow Jones, however, ended higher, marking a 13th consecutive session of gains, which is the longest winning streak since 1987. The US Federal Reserve raised interest rates to their highest level in over 22 years. US benchmark funds rates now rise to the highest level since 2001 to tackle sticky and high inflation. The Fed chair also hinted at a possibility of further increase. On Wall Street, Microsoft shares fell as much as 3.7%, while Alphabet soared more than 5.5%. Well, regional counterparts, Asian markets are trading higher. Hong Kong Monetary Authority has raised an interest rate. Hong Kong has raised interest rates by 25 basis points to 5.75. FIIs, they've bought shares to an extent of 922 odd crore, and DIIs too have been on the buying side to an extent of 470 odd crore. Earnings that we like to watch out for: Nestle India, ACC, Bajaj Finserv, Indian Hotels, Indian Bank, Ajanta Pharma are amongst some of the names that are going to be reporting in their numbers today, along with Ujjivan Small Finance Bank. In terms of F&O queues, 35 stocks have seen long build-up. This includes the like of Vodafone, Tata Communication, GMR Airports, Escorts, and Gujarat Gas. We have also seen in 48 stocks which have seen long unwinding, and this includes the like of Intellect Design Arena, Colgate, TVS, Renewals India, and L&T Technology. 25 stocks have seen short build-up, and this includes the like of Canfin Homes, HDFC AMC, Naveen Fluorine International, along with Syngene and BPCL. 81 of them have seen short covering activities, and this includes the like of Delta Corp, Dixon, RBL, Samvardhan, Motherson International, and PVR Inox. Let's talk about the stocks which are currently under F&O ban. This includes the like of Delta Corp, RBL, and Sun TV Network, essentially, which have made it to the F&O ban list. But let us get going and discuss some stocks and strategies with Aamar Singh, Senior Vice President at Angel One. Aamar, good morning. It's an important day of trade. You've seen monthly week expiry out there, Fed rate hikes coming through for the markets. How can one look at the strategies for our viewers, both on Nifty and Bank Nifty Index?
Yeah, very good morning. So what we are seeing is that I would say that the Fed funds rate hike was more or less discounted by the markets. That's what we are witnessing here in the Indian markets as well as the global markets. And our markets have been firmly in the grip of the bulls. There was some, I would say, correction from almost the 20,000 psychological level, and then it corrected all the way down 300, 450 points, 400 points correct, the Nifty corrected. But overall, the trend, and if you look at the broader sense of the market in terms of the overall number of stocks which are trading over the 200-day moving average, or in terms of all-time highs, we see that trend and momentum still continues across all multi-cap. So that's a very positive, I would say, development, which is not showing signs of decline. That's one. However, what we are seeing on the Nifty charts in particular, if I talk about the index, so one of the technical indicators are clearly showing that from a short-term perspective, the market seems to be overheated. And also, the markets are in overbought territory. They've been there for quite some time. So that really shows that we could see some sort of consolidation happening. So on the downside for Nifty, 19,600, that's going to act as a 600, 650 as a short-term support for Nifty. On the upside, again, it would be 19,000, 20,000. That would be the zone of resistance. But still, we've been saying for quite some time that the trend is in favor of the bulls. So being a bull makes more sense rather than going short at higher levels. Because most of the other technical indicators, they clearly point towards very strong bullish momentum continuing in the markets. Till we don't see a break below the 19,600, 650, then we could say that a short-term top has been formed. Till now, we cannot say that. Looking at the other index, I would say Bank Nifty. Bank Nifty, now we are seeing that Bank Nifty is
Aamar?
also playing a...
strategy out there, long on Nifty, do you expect a 20,000 mark? Both a strategy on Nifty and Bank Nifty before we address the stocks and news.
Yeah. So as far as Nifty is concerned, definitely one should look at a buying opportunity. Currently, it's around 850 or so. So any pullback towards 19,800 would be a very good buying opportunity, 19,800, 820. On the upside, one needs to be slightly cautious towards 19,900 level. So that's a range one can look at. Today being monthly expiry, so we'll see a lot of volatility there. As far as Bank Nifty is concerned, one can again look at a buying opportunity in Bank Nifty. Any correction towards 46,000 levels, that can be a level to look at a buying opportunity. Whereas on the upside, 46,450, 500 would be the zone of resistance.
All right, Aamar, I'm just going to quickly address the stocks and news. Axis Bank, it's an important one where it's a operationally weak quarter. The only lender, let's just put it that way, to see a rise in watch list book sequentially. Core operating profit has declined 8.2% sequentially, the weakest in last 10 quarters. Operating profit has declined for second quarter in low, and NIM is the lowest in 3 quarters. Let's address the markets open there for you. Tech Mahindra is next on our list, but Nifty 50. Well, we are looking at a positive start coming in for the markets on the monthly expiry, Fed rate hike. In backdrop of all of that, 19,825, 0.25% of gains coming in for that one. Bank Nifty. Let's see if that index is holding up well. Given the trend, we are looking at gains, 0.3% of gains coming in even on that index. Talk about the small cap index and the mid cap index just to see where the momentum is. We're seeing gains to an extent of 0.3% for mid cap and for small cap index too. The trend is no different. In fact, outperforming larger counterparts to an extent of gains to coming to an extent of 0.5% of there. IT index, that's the one which is opened in the flat with positive bias. In terms of other sectoral indices that we have, FMCG, flat start with somewhat positive bias out there. Pharma index is holding up well. Gains of more than 1% out there. That splendid one coming in for pharma. After Cipla is given in that raised the guidance out there. Talk about the auto basket. A bit of selling pressure creeping in. Losses to an extent of 0.75% out there. In terms of other sectoral indices, consumption basket too seems to be down and out in trade. In terms of other sectoral indices like real estate index, PSU banks, amongst other, let's see how is that stacking up. Realty index is holding up, gains to an extent of 0.5% out there. In terms of a PSU banking index, some amount of traction witnessed even on that one. Advance declines, 40 advances versus 9 declines coming in. And in terms of what we have for, the top gainers and the top losers in the list, that's the one where we are Cipla, where the guidance revision is coming. Bajaj Finance, Axis Bank is another one where it needs to be seen that's a bit of volatile at this point of time. DRL and Power Grid along with L&T. These are some of the top gainers out there on the list. Let's talk about the top losers just to see how that is stacking up. M&M, Tech Mahindra, where the results have come in. Tata Consumer Products, which is reported in inline numbers. Hero MotoCorp, HUL and Britannia. Let's talk about Tech Mahindra numbers. Net profitability down by 38%, revenue down by 4.1%, EBIT down by 32%, and margins too have shrunk to 6.7% versus 11.2%. Dollar revenue down by 4%, 1,601 million is what we're looking at. CC revenue is declined 4.2% as compared to an estimate of fall to an extent of 1.8 to 2%. That's the one where, probably the reason why we're seeing Tech Mahindra not doing too well in trade. Tata Consumer Products, on the other hand, absolutely in line of set of numbers, no surprise out there. Indian business has done well as compared to international. Revenue at 3,741 crore as compared to the poll of 3,745 in line. EBITDA more or less is in line with what the street was estimating. And India revenue has come in 15.5% versus the expectation of 10 to 12%. And revenue overall 7% higher as compared to the numbers that we were working with. That's that in terms of Tata Consumer Products. Also, let's talk about Cipla, where the company has increased in the margin guidance, and we're seeing gains to that extent coming in for Cipla after the numbers were reported. Sun Pharma, on the other hand, Taro has reported not so good set of numbers. Sales has come in at $158.8 million. There's an operating loss as compared to an operating income. That's the one which is weighing in. RBL and M&M, we spoke about that. We saw losses coming in for M&M. M&M has acquired in 3.5% share in RBL for 417 odd crore. M&M may consider further raising the stake, but not go beyond 9.9%. Acquisition price is 197. Now, Street has taken this negatively for M&M. Buying of 3.5% is a non-core investment for the company. There have been concerns on capital allocation which has resurfaced, and M&M has not disclosed this stake by essentially, which is also an instance of poor corporate governance, because it's just given in the form of clarification to one of the media house reporting that perhaps the company is lapping up 5% stake. Rail Vikas Nigam, the government is selling in 5.3% stake in Rail Vikas Nigam via OFS. But we are going to be talking much about the Fed rate hike and the impact of that rate hike for the Indian equity markets and the FII. And to join us to take the discussion forward is Santosh Nair. Good morning there.
Hi, Nickey. Good morning, Joshi.
I'm going to start off by asking you, this move of Fed rate hike is much on anticipated lines. What kind of read-through do you see for Indian equity markets? Clearly seems to be a positive session of trade coming in for the markets. Do you think, if not now, there could be a bearing of this development on the FII trend for Indian equity markets? Because thus far, FII trends have been favoring equity markets, so to say.
Well, I think right now the concern that most people in the market seem to have, it's not so much about FIIs buying or selling. It's more about what the domestic investors are doing. So you're right there when you say that typically what happens is whenever there is a change in Fed rates, either up or down, that has a bearing on global liquidity, and in turn that will also affect flows and outflows and inflows into India. But for a long time now, that's not been the case. You've seen rate hikes in the US, but that not having an impact on India. To that extent, I think, or the general feeling on the street is that Indian markets have decoupled to a large extent, whereby interest rate moves in US, they're not having the same kind of impact that they used to earlier. I think similar will be the trend now also.
Okay, so decoupling clearly, which has taken place, is expected to play out going further. But going forward, do you expect our interest rates? Sure, there's a decoupling which has already taken place that you're suggesting. But going forward, do you see what could be the changing factor for the Indian equity markets when it comes to the Fed rate hike? Any sharp hike you think can reverse the sentiment, or a halt for that matter could probably play a spoil sport?
Till about 6 months back, Nickey, the kind of trend you were seeing is that whenever the US Fed used to hike rates, RBI was also kind of forced to keep up.
Right.
But again, that has not been happening for two reasons. One is that our currency has been fairly stable, and secondly, inflation, the big driver of interest rates, that has also been fairly stable for some time now. Of course, of late you're seeing a slight increase in food prices, but then there's always a debate on whether you can actually tackle food inflation through interest rates. Right now, the view on the street is that the RBI is unlikely to hike rates anytime soon. But if, let us say, the Fed hikes rates by more than 2 times, right now what markets in the US are also factoring is that there could be a couple of more hikes, or maybe at best 1 hike from the Fed. But if it's going to be more than that, then probably we may have to see whether the RBI will also need to move in step there.
Sure, I'm also reading a short call story out there where you've spoken about Canfin Homes probably crashing over 9% on Wednesday after reporting in 38.53 crore fraud by 3 employees. relatively a small number, but the impact seems to be huge on this one.
Well, yes, because two factors there. One, this is the second time that a fraud is coming to light in Canfin Homes, and this time the amount is much larger. The last time there was a similar case, the amount involved was about barely 4 crores, but now it's closer to 40 crores. But what possibly could also be weighing on investor mood at this point in time is that within a space of 15 months, if you're seeing 2 such instances coming up, then is there any problem with the processes and systems within Canfin Homes? Probably that could be something that is weighing on sentiment, and that's why you saw the sharp sell-off. And let's also not forget the stock has rallied quite a bit from its March lows. It's quoting at a it touched an all-time high of 910 rupees. So a lot of froth would have also been built up in the system, and typically when that happens, and there's the slightest negative news, you see a overreaction on the downside. To a large extent, I think it could be that there's too much speculative build-up, and a lot of those positions are getting wound down at this point in time. And there's also a concern probably that fresh buyers may take some more time to step in, considering that you have some of the other players in the space also which are attractively valued. So these are the couple of factors that probably could be weighing on the sentiment and causing the stock price to crack.
Santosh, what really fascinates me is the way RBL Bank has behaved in the last 1 week or thereabouts. Yesterday we saw gains to an extent of 7.5% after there was this news break which came in that M&M has picked up stake in the company. In anticipation in that also for the last 1 week, we've seen significant gains creeping into the counter. And an M&M just reporting the whole deal as just a matter of clarification. Does that raise an eyebrow? I mean, given that it could just come out with a proper announcement rather than just a clarification, how do you look at it? Do you also look at it like a corporate governance issue coming in from M&M?
Disclosure, I would say. I mean, if they made the disclosure,
clarification of the media carrying those articles, right? It's come in the form of clarification and not news update. Don't you think that's a bit of lack of transparency coming in?
Well, hard to say on that, but let's focus on the RBL Bank stock. Here it's also probably, I think it could be technical factors at play. It could be short covering. The stock is in the FNO ban list at this point in time, which means that only existing positions can either be unwound or squared off, because of which probably we are seeing this kind of a sharp reaction. Quite a dramatic turnaround there in the fortunes of the bank from the last 1 year. But of course, almost all banks have had a fairly good run over the last year. RBL too, where I think there was too much pessimism built in. And because of that, now we are seeing a reaction on the other side where there has been an improvement, or at least things haven't gone as bad as some people had feared last year when there was a change of guard. And now we are seeing a reaction on the other side.
So that's a good turnaround story, at least for RBL Bank. But Santosh, we're going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
My pleasure, Nickey.
All right, let's also talk about the new kid on the block. Netweb Technologies up for an impressive debut on the cards for July 27th coming in. IPO was subscribed by more than 90 times for this one. After stellar listing gains in Utkarsh, IdeaForge and Cyan DLM, investors are now expecting Netweb Technologies to repeat the performance following an overwhelming response for all set of investors. Reports suggest a healthy listing gains to an extent of around 60%. To its issue price of around 500 per share. But let's talk about more fundamentals. It's an action-packed day clearly for us. And to take us, to join us to take the discussion forward, we have Mayuresh Joshi, Head of Equity Research, William O'Neill, India. Good morning, Mayuresh. Crucial day when you're joining us. A, expiry. B, you're seeing Fed rate hikes finally coming through. Batch of most of the banking sector that has reported in their numbers, barring State Bank of India, in terms of the large sector banks. How are you looking at the markets? What is your suggestion to the viewers out there?
Morning, Nickey. Pleasure to be on your show as always.
Pleasure is all ours.
2 aspects. One, the Fed rate hike of 25 bips largely gestated at the commentary that Powell has probably given, that he'd probably look at data points in the September policy, whether to pause or probably have a 25 bips hike. A large part of what the bond markets are suggesting is that he might pause looking at the data points that have started coming through. So to that extent, I think most of the global markets are looking in very good shape at this point of time. On our own Markets with India methodology, we are confirming that the markets are in a confirmed uptrend. And therefore, I think the entire thesis that the markets expecting to do well might very well continue. You are absolutely right in terms of the earnings trajectory. A lot of earnings which have probably come through banking and financial space in general, whether it's the PSU banks, the private sector banks, or even NBFCs, have reported a very strong set of numbers. Metal counters have reported decent set of numbers as well, with expectations that next few quarters with input costs coming off should be even better in terms of their reported EBITDA and reported EBITDA per ton. Pharma companies have started showing a strong resilience. And to a certain extent, IT companies, where the earnings was expected to be soft and muted, most companies, barring Infosys, have given a reasonable amount of commentary as far as the second half is concerned. So all in all, I think earnings are looking up for the Indian market. US markets earnings are holding up, and the macro data points seem to point towards a very, very soft recession out there. With crude expected to stay in the range that we are thinking about because of weak Chinese demand, and Chinese demand expected to only pick up probably in the latter half of this financial year, the FPI flows will also continue into markets like India. So I think the going is good at this juncture. Valuations might be a little bit on the higher side, but our own take is that if you have a sector stock specific approach, I think there is still money to be made in this one.
Mayuresh, let's talk about Cipla. The stock is up by as much as 7% The numbers have been, of course, better than estimates. The company has increased the margin guidance to 23 to 23.5%. US sales estimates have come in at $210 to $250 million as compared to 195, which was guided earlier. How are you looking at the pharma basket right now, and also Cipla for that matter? How are the valuations stacking up? Do you think the stock still offers a good entry point, or you think much of the rally is now done past for the counter?
So two aspects. One, I think the entire sector is probably looking like it's gearing up for a better earnings story, and Pandre, our institution software, is pointing out that pharma might be one of the better performing sectors in the best quarter probably as earnings start coming through in a more structurally optimistic fashion. Having said that, I think for the numbers that have probably come through, Cipla in particular that you asked, Nickey, the expectations in terms of EBITDA margin expansion was very, very muted. And what the company has probably delivered at 23.6% with a margin guidance which is up at this juncture is obviously a huge, huge positive. The second aspect is obviously Revlimid sales have helped both Cipla and Dr. Reddy's, and to a large extent to a lot of pharma companies as well. And that is reflecting in the US sales. They reported $222 million compared to $204 million on a quarter-on-quarter basis, which was a huge surprise as well. Indian market specifically, I think you're talking about the branded prescription, is holding up pretty well. And all these factors probably play put in terms of peptide injectables, as an example, expected to get launched, which is a high margin business in the US, to prop up those margins. FDA concerns might start waning off as the more clearances start coming through, which means more niche drugs coming in the next few quarters, aiding to EPS growth. So yeah, I think Cipla has shown a very good EPS strength on Markets with India. And therefore, our belief is that this should be kept on your buy watch list. It can still be considered as fresh. Buy valuations are not too expensive at this juncture. In the broader markets, Dr. Reddy's stellar set of numbers again, expecting a lot of biosimilar launches, which is again a very, very high niche margin product. And a lot of their backward integration for almost 60-70% of their molecules is expected to be done in-house, which means that margin accretion can be very, very strong going forward as well. So yeah, anybody holding Dr. Reddy's, a stock like Zydus, which we have discussed on your show, should continue holding. Cipla probably looks like a good bet at this point of time. And the dark horse can also be something like a Sun Pharma. If it reports a better set of numbers, that stock can continue its momentum.
Sure, that's the word coming in. Sun Pharma could be the dark horse out there. But let's also talk about overall, what do you make out of the deal that has been just announced with terms of in terms of M&M picking up stake in RBL? A bit of, you almost saw 10% uptick coming in for RBL Bank the last 5 consecutive sessions or thereabouts. And you're seeing M&M beaten down. Does that raise a corporate governance issue for you? It's a non-core investment, and the way M&M has come up with a clarification and not a, it's more of a, clarification rather than an announcement which has come in from the company. How are you looking at it? Strategically also, and, along with that fundamentally. So 2 questions there, essentially, that I'd want to ask. M&M, do you see that as a good strategy? Do you see that in the favor of the shareholders? And B, corporate governance issue, if at all?
So to answer both your questions, Nickey, on the first part, really did not understand what was the logic in terms of having a stake built in a listed bank itself, and that through in the open market transaction itself. Again, it's not related to any of their businesses at this juncture. Their financial services arm, which is M&M Financials, is doing pretty well when it comes to the auto financing part of their side of the business. And therefore, from capital allocation perspective, I think they've been very, very prudent so far. So I'm absolutely beleaguered on why this probably has happened at this juncture. And probably, I think a lot of questions will be raised. To answer your second question, whether this raises corporate governance issues, not really sure of this. What was the thought process in terms of the strategic inputs that the board has probably got? And what are they really looking at? Because if you want to really look at something of having a board seat in any listed entity, you need to at least have 10 to 12%. So are they serious in this business? Does this mean more capital allocation? Or was this just an investment of sorts that they have made, where I think a lot of question marks will be raised? And therefore, the kind of reaction that you're doing on those stocks, I think a lot of questions need to be answered by the M&M management related to this.
That's precisely where I guess most of the street confusion also lies, and you're seeing that stock being beaten down in blue completely with the way it's behaving right now. Losses to an extent of 5.5% coming in for Mahindra and Mahindra, as compared to some amount of losses also for RBL Bank this time around, which is already in F&O category. Let's talk about AMCs and the banking business overall. Most of the AMC companies have also reported in their numbers. Read through for that. How are you looking at it, and your outlook with regards to the performance? Aditya Birla was the latest of the lot who reported in the numbers. Read through for that, and overall for the banking sector, most team left to the rally or just playing out of the book right now?
No, so I'll answer the second question first, Nickey. I think for the banking sector, I think the numbers have been exceptionally good. So if you probably look at PSU's private banks, year-on-year performances were anyway expected to be stellar. But most banks have probably reported a stellar performance even on a quarter-on-quarter basis. Except the dip in NIMs that you probably have seen for Axis Bank, a lot of banks have reported stable NIMs. For the public sector universe, provision coverage universe has increased substantially, which probably means that the expected loan coverage is substantially covered onto their balance sheet. Deposit growths have been very, very good for the system as a whole. And with advances expected to pick up steam even more in the second half as the festive season comes through, my own sense is that this sector is probably gearing up in terms of having even a better performance. Yes, I think the bank Nifty hasn't moved up substantially. These stocks have moved up substantially. Is there more re-rating expected, both in terms of price earnings and price to book? Probably yes, and yes, the momentum might probably exist. So we remain a little bit more bullish in terms of the PSU banks at this juncture, because there is a little bit of more of valuation comforts and the re-rating aspects that we're seeing, and the EPSRS ratings on markets may look favorable for the PSU universe. For the AMC pack as a whole, the sentimental reactions have got played out. And why I say sentimental is for 2 reasons. One, I think Geo BlackRock coming through obviously is a huge dent in terms of what can happen to business for the sector as a whole. But my own sense is that, and the reports that we are probably reading, if India has to go through a 6 trillion and over a period of time a 10 trillion over the next 15, 20 years, you look at the sheer number of households, Nickey, that will start coming out from the middle class pack to probably the higher middle class, the UHNBs as we call it as well. And therefore, there is an ample amount of scope and market opportunities over the next 5 to 10 years as India grows and the demographics grow even further in terms of, in fact, financial savings that can probably come through and financialization that can probably happen. So a dent in terms of the sentimental reaction, larger big picture, I think there is enough scope for a lot of these guys to keep on growing as India grows.
All right, Mayuresh, we're going to leave it at that. Thank you so much for taking out the time and speaking to us. Indeed, a pleasure having you with us.
Thank you so much. Pleasure's all mine.
All right. With this, it's a wrap, and goodbye from the entire team who puts this piece together for you. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.